Sandip Sabharwal also joins us on the show right now. And Sandip, let's begin by discussing IndusInd as well. You think that perhaps the best of this one is behind in terms of performance, and it's only going to worsen from here on, at least for the immediate term?
Anisha, what we've seen in financials is that many of the financials were under stress. So wherever people feel that there is some stress building up, those stocks are as it is underperforming, and the results have come subsequently and justified whatever the markets were thinking. So there is some stress at the lower end. There is some stress on the unsecured lending book, etc., and which has also been contributed by higher rates and tight liquidity which RBI has kept. So it's not that uh, this has happened without that. So I think it's important that RBI starts easing policy now, because otherwise the stress will go further. But nevertheless, this was something which was expected. Now, uh, credit costs for banks have been going up. But if you look at it, they are still low by historical standards, and quality of the bank books is still very strong relative to history. It's just that the last few years, very high quality and recoveries have made, and many analysts, etc., think that that was the base case and this is going to continue. I think normalcy is returning. There will be some NPA build-up, there will be some write-off increases, etc. But overall, if the banks can still maintain good balance sheet and reasonable profitability, I think it's good. So stock prices are adjusting. So I think this quarter, as the stock prices of financials adjust, they will give some opportunities to buy.
Right. Sandeep, what's the take on ITC? I mean, of course, not a pure play FMCG company, but FMCG has actually been resilient surprisingly amid all the challenging environment and, the demand conditions. And this comes just in the backdrop of what we've heard from Unilever.
Yeah, so marginal outperformance, but the margins have been under stress. So results in terms of profitability and outlook for the future immediate term seems to be much lower than what most analysts are expecting. And the stock has been a big outperformer overall. Like the last few weeks, it's obviously given up, I think around 10%. But then overall, it's been a bigger outperformer on the FMCG space. I would think there are no big triggers for any significant upside in the near term for ITC.
So, Sandeep, what's the shopping list looking like? And when is it that you would start buying into any of the names that would be on that?
I think on the large cap side, uh, I think Reliance has corrected 20% from the top, so that's coming to some reasonable range. Uh, Consumer stock like HUL, I think it's off 20% from the top, so another 5-10% if it corrects, it could come into reasonable range. So from large caps now we are looking at 12 to 15% kind of returns because of market valuation. So wherever stocks correct in a manner where we think we can get those kind of returns, I think that could become reasonable. LNP is in the reasonable zone, but if there are some weak prints in the results, etc., and if it corrects a bit more, though that could be in the range. So markets have given up reasonable gains from the top, but still think that they could be still possibly 3 to 4% more to go in terms of the corrective move. Let's see. And then I don't see a immediate very sharp up move again. So I think there will be some consolidation, then there'll be up move. So we are in a zone where the investors, long-term investors, will get time to buy into stocks they like at prices at which they want, which was not present for the last year or so when there was a spiraling up move across, especially in the small and mid cap segment.
Given us the large cap list, but what about mid caps? What is it that you would be adding more of or buying afresh?
I think wherever there is visibility of growth and outlook, so I think stocks like on the infra construction side, stocks like NCC, Aluwalia contracts, which we hold. But for fresh buying, we were waiting for the corrective move to play out somewhat. and that's played out in the near term. Some weak prints, etc. In terms of results, near-term results are leading to some corrections. So I think these stocks look reasonably placed. And then I think stocks in, let's say, the power transmission equipment side, like KEC, Kalpataru Power, I think they are also pretty well placed. So on corrections, those could also be reasonable bets. UPL, the global agrochemical cycle is sort of recovering, but we need to see conclusive proof. So UPL ran up after the last results. It's given up most of the gains. So I would like to watch out the current quarter results to see visibility of recovery. And I think that could be a reasonable contrarian bet, but I would wait out for the results to come out.
Nuresh, what is the trade, let's say not today, not tomorrow, let's say for rest of the year? We still have a good 2 months left. What is the trade for rest of the year?
Sector which looks interesting for the factors banks and financials, which can be accumulated because they've not gone anywhere. And many of these names have corrected quite a lot. And you also have names which have not gone anywhere and is looking interesting. So you have HDFC Bank, which has not crossed about 1780, 1800 levels for almost 3-4 years now. And 1600 has become a base. So in this band, you want to be accumulating. Same is the case with, say, you pick up a PSU bank also, the correction has been large enough. So you have a PNB which has gone down from 130, 140 all the way down to 90 to 100 band. Similar is a correction, a 15% correction in the SBI. Now you have IndusInd Bank which will correct. So the whole sector has seen a good enough correction. And you have leaders also coming in place, HDFC Bank. Then you have Kotak Bank, which has gone nowhere for the last 4 years. So it could be an accumulate wherein the downside could be limited because of the underperformance for the longest time. And a little bit of a change in FII flows would imply the bounce back in financials, given that their largest holding.
Sandeep, it appeared, let's say, last couple of quarters that banks have a good runway ahead. But if I look at the kind of commentary numbers we've got, let's say from IndusInd Bank or Kotak, even HDFC Bank, concerns on NPAs are coming back, at least on the microfinance front, on the unsecured loan front. So while it appears that banks are in a good shape, but now things are looking shaky there.
So I had been pointing this out for a long time, why financials are underperforming, because of the tight liquidity which RBI was maintaining and higher rates. It was imminent that there will be some deterioration in asset quality starting, and which will continue next year also. So, but it's not so bad. So what we need to recognize is that because, like I was earlier saying, last 3-4 years, the NPA write-offs, asset quality improvements, and the overall asset quality has been so good that people have got used to it. But even the current credit costs, which many of the banks are indicating, they are not very high by historical standards. So I think despite what's happening on the consumer sentiment side and the tight liquidity constraining credit and impacting growth, uh, I think the financials are reasonably placed. So I would think that I would agree with what Nuresh was also saying, that as many of these financials possibly correct or consolidate, it will be a good opportunity, especially on the larger financial side, to buy into those stocks which are corrected a lot.
Pradeep, just wanted to understand whether or not autos is a pack that you would bet on at all. You know, we've seen the kind of slowdown that autos are kind of gradually seeing, at least the passenger vehicles. And then, you know, there are all those issues with Ola Electric, etc. We all know what happened to the Hyundai IPO. Is there value on the table yet? And would you be venturing at any of the auto names right now?
On the consumer side, autos is a reasonable space, but like I was saying at the beginning of the festival season, it was important that the festival demand sustain, because inventory levels are high, and festival demand had to sustain at reasonably high levels for the inventory to get cleared and then these stocks to keep performing. However, early indications don't seem to indicate that the festival demand is very strong. So the pain gets prolonged a bit, but as that leads to further correction or weakness in these stocks, then I think many of these stocks like Maruti or M&M, Bajaj Auto, etc., even TVS, all the TVS valuations I think still are very high. They will present opportunities to buy. So many of these stocks are 10, 15%, 10, 12, 15% off their tops. Maybe another 5, 7% drop, we can look at some of them.
Track Pharma also very closely. I know in the past we've talked about Dr. Reddy's and Son, but Piramal Pharma, that jumped up a solid 10% yesterday, reacting to its numbers. The PAT did very well, of course, on a much lower base, but it was a 350% kind of jump. What is it that you're making of, if at all, you're looking to add positions anywhere in pharma?
The pharma stocks have not corrected so much in the current correction. In fact, there have been some stocks which have actually done reasonably well and held on. And in the near term, historically, I've liked Reddy's, Lupin, and Sun Pharma. But at the current prices, I would just hold on to what we have and not look to add, because this is not a segment which is quickly falling so much or giving opportunities to buy. So just hold on, because the tailwinds for the sector seem to be there in the near term. Hold on to what we have unless and until we get better prices.
2 years ago, where we were in terms of market versus where we are this Diwali, it keeps on changing. A year from now, where do you think the market leadership will change, and where do you think the market underperformance will start?
Very tough to say what will happen after a year. But I think overall, equity markets are placed at a space where it's not bad. Like, I don't think that we are going to see huge downsides, but I don't think that we are in a stage where the growth paradigm is such that there is going to be some huge uptick. The underperforming spaces sort of where there has been some stress, like consumers or financial. Typically, if that continues in the near term, then from a price perspective, I think a year from now, these could be spaces where we could actually get much higher than market returns, than the overall market returns on a broad basis.
Sandeep, the PSU space and, especially these defense railway linked stories have got really badgered in this current market fall. We were just looking at the kind of moves that Cochin, Bharat Dynamics, MRPL, IRCON, Hudco, even in Engineers India, Mazgaon, IOB, etc. And the damage is from 26% all the way to 38, 40 odd percent on individual names from just the 52-week highs. Would you be a buyer anywhere here within the PSU back, ex-banks?
I would look to add some of them possibly as they correct more. It is still a very overowned space. Retail investors are still hugely into this space. And except railways, I'm not looking to buy now, because a big part of the railway play happened. And I had said earlier also that we exited a majority of our position in railway stocks, and thankfully at near the top of the cycle. Other PSUs, we don't own much, but I think on the defense side, there are some companies which have got very durable models, which include companies like BEL, HAL, etc., where if the corrective move continues, which it should, because we could still see 5 to 20% sell-off in many of these stocks. Those could present opportunities, or even a company like you mentioned, Engineers India, it's given up huge gains from the top. And I think even that seems to be getting into some reasonable valuation zone.
180 rupees for Engineers India. It's just one of those stocks which, in a sense, has not kept in pace with what other defense stocks and railway stocks have done. But yeah, it's got a very interesting business, so to speak. What about Container Corporation, Sandeep? I mean, it's a business which is It's a company which has got cash flows, almost monopoly, great in terms of dividend payout, and big beneficiary of expansion. In this year, the stock has taken a knock of 5% and it's off 20% from the high. This investment is not going to happen. Is Container Corporation a good stock to buy at these levels, Sandeep?
I don't think so. I have never liked the stock so much because it's a 5-10% growth company, finally, irrespective of their positioning. So, very tough to give a valuation of 30-40 times to such a stock.
Sandeep, the news of Amitabh Chaudhary getting a 3-year extension for a franchise which in a sense last couple of quarters has demonstrated excellence. Do you think the stock now moves from market performer to market outperformer?
Yeah, I think so because our two big holdings in any case on the financial side are Axis and ICICI. I think Axis is very well placed and continuity in management obviously is a positive, especially in financials because it was also important for because the city acquisition also happened and consolidation and growing that book. So I think they have handled that also pretty well. And valuations are not expensive at all. So, like I was saying earlier, that many of these large cap financials, as they have consolidated a lot this year, we should be outperformers as we look towards next Diwali. In between, there could be some volatility, but I think over the next 1 year, some of these financials could actually do very well. And in fact, many of the NBFCs also, which are correcting because of near-term asset quality concerns, etc., which also are much lower than historical concerns, could also present opportunities at some stage over the next couple of months or 2-3 months.
Sandeep, are we nearing that point for Reliance where the downside could be limited and the upside in next 1 year could be significantly higher, which means downside 5%, upside 15%? Are we in that zone for Reliance, Sandeep, now?
Yeah, absolutely. I think downside is limited. It's just that because of the capital allocation, because earlier they said that we'll be debt free, then they have gone ahead and invested so much in the new business, etc. Now it's ironical that many companies are coming, getting listed, who are in many of the new segments and getting crazy valuations. But on the flip side, Reliance, because of these investments, is actually is underperforming. But I think what you're saying is right. So in large caps, once valuations of the overall market move up, we need to buy stocks which we think can give you 12 to 20% kind of return. I would think that Reliance is in that zone where risk reward, what you rightly said, could be 3:1.
The risk reward in your favor, in your favor and not in your favor. I mean, Reliance is one where it is in your favor. Any other stock where the risk reward is in your favor?
So I think, like we were talking about Axis Bank, that's also in that category, risk reward in favor. Then I would think L&T, but we need to let the results come out and let's see, because any softness in guidance, etc., could lead to some further sell-off. So at that time, we can look at it. Bharti also is well placed, but it's not corrected so much. So let's also see how their results and guidance, etc., comes out.
UBS has come out with a note on L&T today. They've downgraded it to a neutral from the earlier buy. They've cut the price target as well to 4,000 from the earlier 43.30. They're saying that there is a weaker near-term outlook for L&T. The managing returns cash flow is very key amid the low appetite to grow orders right now. Supportive core earnings, of course, but new order growth is likely to weaken. That's their estimate for L&T in the very near term. And they're also saying that, the competitive scenario is favorable in the Middle East, but is it sustainable really? And they're saying that the market always rewards orders over core earnings for L&T. So a wait and watch game, much like Sandeep just highlighted. But Sandeep, good to have you on the show. We'll let you go on that note.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.